Hey traders, Day Trader Rockstar here, and a video, just an update video on some futures trading tips and a little review right now. It is going into the Memorial Day week. We had a half-day session on the futures on Monday, and we're gonna have a shortened week starting tomorrow, Tuesday. So we'll be trading live here at daytradingradio.com. Welcome. Feel free to come over, check out the live stream. It's at daytradingradio.com. Now, I trade a divergent style of trading, scalping, the futures. We also do stock trading, swing trades, options, you name it. If we can make money on it, we're gonna. I pretty much apply the same techniques that I teach. Our methodology, the high probability methodology, is very important to stay within the boundaries of our setup. So I always review the setups and show you some of the best setups. I was just reviewing today, so I said, you know what, I'm going to kind of go out and just show you tonight. If you were trading tonight and looking at certain opportunities, or today, let's just actually go back out here. Now, this is what we are right now. Futures are up today. Futures are up a little right now. Looks like about 7 points on the ES. Nasdaq's up 40 points, and it looks pretty good to start the morning off tomorrow. And this is currently where we're at right now. We were looking at this earlier, the 60-10 here, how high the turn here was up, and how relative the price came down. It wasn't at the lows, but it was pretty close. So we always point that out. I did point that out on my stock video that we just sent out. Because I wanted to show you the markets. But this is something that you should pay attention to, and it's called a relative divergence. And we had a nice little, pop and a pullback, and the stochastics pulled back here on the 9-3-14-3. I don't know what the 44 is because I don't have it on this one, but the 60-10 really turned up in a very aggressive way, even though the price came very close to the closing prices. And that's what we call a relative divergence. It's, relatively speaking, it's a divergence. And it's just a good one, and that is a nice little move. Now the bots I think took that. Actually, we had a couple setups earlier. It's active today and doing really well. Let's jump over here. So we're just going to go back, and I just noticed a couple things I want to point out. And one of the things I want to point out to you is what we call a running divergence. It's a great setup, but it's also a dangerous setup because a lot of people you have to really blindly kind of have faith in it, because it's going against some of the rules. But that just happens because it is a certain setup in itself, and that setup does take a while to set up. And one of the things it does is take out the lows where we expect it to hold. But we know when it sets up like this, we could get in and make big moves on it. Anyway, I'm going back here. Looks like at 1 o'clock the market it kind of closed half day, and it opened back up at 6 o'clock today, and we kind of gapped up there. You see where we gapped up, and that was actually a divergence in itself. And I always do try to watch those divergences between the opening, closing prices on the futures. Meaning if we close like on 5 o'clock and we open up at 6 o'clock, we have a gap up, but the stochastics fail to rotate up, and we started selling off. That's usually a great sign. I've seen this happen so many times that I consider that a good divergence. And as you can see, that was the top here. But that's here and there, and again, we're in part of that. But this is the important thing I want to show you. This is what we call a running divergence. And I want to take this and actually do a special little chart setup on it. I have it on a cheat sheet that I'm building. We talk about it, but we don't see it as much. I've been seeing it more and more. All right. So it's where we have a lower low, and it's usually 3 lows in a row, kind of in a standardized, underneath the 200 period moving out, just like this. You have a low, bounces, a lower low, bounces, and a lower low. And when we have that low and that higher low, if we look at this slightly higher low here, all right. Sorry for there we go. We have a low and a lower low and a low and a higher low. And what typically we want to do is, you see that divergence you get, and you put a stop here at the lows. So you put a stop there at the lows. That's our best stop, because most of the time divergence will work good until they give us a secondary divergence, what we'll call a running divergence, where our price comes back down, takes out the lows, but the stochastics continue to maintain the divergence on the price. And this higher stochastic turnover, even though it's higher than this one, which is even stronger, it just needs to be higher than the original one. We have a low, a lower low, and a lower low. We have a low, a higher low, and a higher low. This is a perfect running divergence, and usually you want to just pick that up. If you get out, say you get in here, and you say, oh, it's a divergence, oh, it's starting to turn over, it failed, I got to get out, and it sets up like this, you need to get right back in. That's okay to take a loss. It's okay to swing on a good pitch, and sometimes that pitch fakes out. And usually, if we have a divergence and it sets up like this, and you run down and you see that stochastic, that is another divergence, and that has to be taken. It has to be taken. I'm telling you how important it is that the running divergence is super strong, but it's a little scary because in the beginning you kind of you have your technique that defines a stop out if you take out the lows of that low. So then you maintain that stop, and maybe you go down a tick, but the stochastics turn back up aggressively, even though we took out. That is considered a divergence, a very strong divergence, and you have to take that. You have to take that. So that's such an important trade to take. All right, you can't just say, "Oh, I got busted on this one. I want to wait." If it shows up like this, this is a textbook example of a running divergence, and it's a quad rotation too. You can see the 1610 down here, and it's a divergence on the 14.3. It is perfect. It is a perfect setup. So this is really the whole basis of this this video right now is this setup. Now I noticed it happened here too. Look at this. You kind of almost had it here. It wasn't really. It was just a good divergence here, but it was very close. I mean, if you do get that running divergence, you kind of come back down and it holds a higher low. But this is another divergence right there, and that had a nice move. And I believe there was another one. We're just going to kind of scroll back here. Now this is 8 o'clock in the morning, Memorial Day. Everyone's by the pool, getting ready to go to the beach and stuff. I don't expect too many people trading. But there is some action in the market, and the market kind of pulled back and had a divergence and a big pop. And this was a perfect textbook running divergence right here. Perfect textbook running divergence. All right. Just scrolling back, and I just wanted to point that out really today because it's such a good setup. I'll kind of copy and paste that, write some notes up on there, make an individual video on it, and put it in our playbook, because it is an important setup. Overnight here, 1:30 overnight, not that fun, but just looking at some levels. Don't forget, if you're trading a slower time frame and you say, all right, I'm trading this overnight holiday session, not much is going, we're kind of leaking up here, and you take some setups, like you see maybe a small divergence there, and you take that, and you see that the market comes back down. I just want to put this out there like that. The market comes down underneath that 80 line, actually the 20 line here. It's a sell side divergence. When it gets, and you're trending higher above the 200 period moving average, and you get a pullback and it holds the 20 or 50 period moving average, and this pulls back to the 20, this is most likely going to be a bounce, and it's most likely going to be a flag. So you have a decision to make. If you recognize that divergence and you get in here and say you're not the best entry, you're 19, and it comes down to maybe you have 2 ticks. Take those 2 ticks. Don't set my parameters at 6 ticks. I need to get to 6 ticks or I'm going to get stopped out. No. Be proactive. Understand why stochastics work so well. Understand the strength of a trend, and the concept of counter trend trading. First of all, the odds are against you if you're going to short an uptrending market. You're going to have to be taking those trades off. This 9.3 stochastic is going to give you that opportunity. If you have a divergence in a 9.3 stochastic in an uptrending market, you need to just lock it down. Whatever you have, push the button, take it. There'll be better setups. Just remember that these trending markets, especially on the sell side, have to be, you don't want to take every sell divergence in an uptrending market. Don't think that the rules have to be applied to every situation. Like, oh, it's a buy signal. If the market's moving up, you know, and you have that strength, it's better to wait for that buy signal, that pullback, divergence, pullback. You don't want to test fate and kind of go against the grain here. You can do it. I mean, when you do have a divergence, but you have to take your profits much faster. You're probably going to get something. Here's a nice little double top divergence right here, and a fast little drop off, and it came right back up fast. I mean, if you got in here and it started dropping and you end up getting in here, or even worse, and then it bounces back up, it's not that it's going to destroy you because the range is not big. But again, you always have to recognize the divergence, get in and get out. And again, I'm pushing the, I'm just kind of showing you in a dead overnight market. It's not the best example. This video was mostly to kind of just point out that running divergence and how important it is to identify a running divergence and not to get stopped out of a running divergence. Look at that. Look at that divergence. That's beautiful. I mean, we have it. We have our trades. We know exactly when the market's going to move. We just have to have the patience to wait for them. You have to get alerted to them. That's why I'm developing the Futures Trade Alert Network. If you're not part of that, you get those alerts on your phone, instantaneous. Look in the link for a descriptive page and tells you all about it. It's incredible service for only $20 a month. The other thing is, waiting for your pitch, waiting for your cards. Do whatever it takes in your head to kind of, understand and always review. Every day you should be going back over your charts like I do. If you're a futures trader or a short-term trader, go back, say, was this a viable setup? What would I have done? Where did it go? What should I have done? You're going to see these, and it's also going to gain. You're also going to gain some confidence. I mean, here we kind of had this triple top, lower stochastics here, just choppy, not much going on. I'm not going to even bother with this. I mean, this is 4 o'clock on a Monday, Labor Day. No one's trading this. But this, as we get more volume coming into it at the opening, this is now from 9:30 on. There's a viable trade here when you have a divergence like that. Just right here, you had a divergence. Right here, you had a divergence. One last thing. Again, watch the buy side. If you do get a setup and it's rallying and it's above the 20, 200, and 250 and 20 period moving average, and they're spread out like this, and the 60-10 is embedded, all right? You don't want to take those shorts. And if you are going to take them, you have to take them off extremely fast. You want to play the game, you got to play by the rules. The rules are the 60-10 is embedded. This needs to come off as fast as it, usually it's going to hold the 20 period moving average. If it starts turning back up, it's just a lot of pain there. There's no reason to do that. And again, look, you'll start to see price action. You'll see that some of the indicators, how strong they are. You'll notice these things over time. And these things will come to you. All right, here, there was a little double top divergence again. Again, that's a nice little move down. Sometimes I can't get those things here, but that was a decent divergence too. And it slowly rolled over once we got overbought there. And that's it. Let's see where we are right now. This is where we are right now. Do I see anything? Possible 5-minute here. Very possible 5-minute. Also, there's a new coupon. Let me not forget. This is a pretty cool coupon out today. Let me go over them real fast. Bear with me. All right, so Bullinox just came out with a sale today. It's only a 2-day sale. It ends tomorrow at midnight. So if you get this in the next 2 days, definitely take advantage. It's $475 for the 25K account. It's a flash sale. The code is DTR25K. Simple. Only for option 1 and only for the 25K account. The ends tomorrow, 11:59. And it's for the first month only. And what they mean by that is they charge you this for $475 for the first month, and then it recurs at the original price, which is up there. Let me see. Let me show you how that works. All right. If you put the DTR 25K, make sure you click on the 25K, and you push apply, and you can see it takes $140 off the monthly thing. 145, 140. So it brings it down to 475. 475. Scroll down. You put in your information. Put in your coupon code DTR20. Well, you already put it in. Up on the top there. Just fill out your stuff if you don't have an account already, and then they'll send you instruction on how to set up. You get the Ninja Trader account and everything else goes along with it, with the rhythmic, the charting. So I'm going through the process for you right now. Just connecting my PayPal to it, going through the process and see exactly. Agree and pay. And set to. So we're going to look at the conditions here. So that's what I want to show you. Terms: 475 for the 1 month, and then 145 for each month after. Starts on May 28th. So what I do right away here is put into my phone, alert me on June 25th that I have an upcoming coupon, just in case I'm not qualified on it, or it's not up to, I haven't, I'm still in the process, or whatever the situation is. I want to know if I want to cancel before that 145, and you can just easily cancel. So that's what I would do. I mean, take advantage of the 475. I mean, that's pretty damn good. Just to, I want to get 10 of these and just see what we could do with them on 10 of these for the month. Going to be $50. I mean, that's pretty crazy right there. So that's it. Just don't forget, anytime you want to look at that, you want to look at what the recurring month is. That's when you see someone that says lifetime. If you see something that says lifetime, then that means it's good every month, recurring at that price, and that's also important. And we usually see that in Apex. I'm going to show you those coupons that are now open right now. Let me just show you these coupons. All right, so this is the latest one here, the Bull & Ox. It's only good until tomorrow night. DTR25 is the code. Apex has a great one right now. It's a 90% off on the 250K account. That brings the 250K account down to $1670. But remember, this is something you have to really pay attention to, because the recurring fee is a lot, and so is the qualification fee, the one-time fee. If you do qualify, you always have to look that stuff up. But always, again, you could always cancel it. $1670 for 250. The 2-day sale was extended on the Bull & Ox. They still have a 90% sale on, and that's the lifetime recurring. That's good. It expires on the 29th. So most of these are expiring at the end of the month. So take advantage of it. The Bull & Ox 90%. That's DTR 90. I think that one's probably a good one, a great one. And then there's the Apex. They have a 90% one off too. DTR Apex is the current code. And that's still, they're going back and forth. So, and then the Apex Trader also enables you to have 1-day qualification until the end of the coupon. So that's a bonus on that. So there's different pluses. I mean, the 475 sale, I've never seen anything that cheap for 1 month. But just remember to cancel before the month is over, or qualify and then just do what has to be done if you want to keep the account. So that's a couple of the good coupons right now. Hope you enjoyed. If you have any questions or anything, just email me at dtrs@daytradingradio.com. dtrs@daytradingradio.com. Have a good one.